Welcome to the For Tracy Money Audio Commentary. This is Owen Tracy recording, and it is currently 4:19 p.m., and that is Central Time. Well, I apologize for a little bit late recording today. I think I've picked up a bit of a virus, and I'm just moving a bit slower today. But when we look at the 30-year yield, it was hovering around 5% for the last 18 months. And briefly, earlier on this year, it was almost breaking out, but then it failed. And now it's back below the 200-day moving average. Now, there's still a sequence of higher major reaction lows, but it is trading below a significant trend mean. And this raises important questions. Over the last couple of days, the number of reports that have crossed my desk talking about the potential for a debt crisis have proliferated. And of course, that is very much in advance of the Fed's rate decision tomorrow. We know what the problems are. They're well understood. And bond yields are actually coming down. Now, that raises important questions. So what are the problems? Well, we know that there's a lot of debt. And we know that the US government in particular doesn't really show any signs that they're paying any attention to the size of the deficits. There's going to be an impending argument about the budget and the debt ceiling. And that is going to move into overdrive over the next 2 weeks because the US government is going to run out of money by the end of the month. But of course, the market really doesn't pay any attention to that because we have been in this situation before. Is it a serious eventuality? Absolutely. Is it something that will be very difficult for the public employees if there is a shutdown? Yes, it will. But is it something that the market is willing to price in being a particular problem? No. Because we know that eventually the politicians will cross the aisle and come up with some kind of deal. But why are bond yields coming down? One of the biggest fears that people had, particularly in 2023 and then in 2024, was first that yields had gone up so much in the first place because of the inflationary impact of the pandemic coupled with massive monetary accommodation and then deficits that were outstripping the imagination in 2022. So the bond yield came up from